Hello, I'm Edward Slavis with eXp Realty. I'm the team leader of the Slavis Group, and this is your DMV real estate market report for March of 2023. This month, we're going to focus on the entire DC metro region, not just Washington, DC itself. As always, let's start with interest rates. A month ago, we saw rates at about 6.35 or so and climbing. They peaked at just about 6.75, and now they're back down to about that 6.35 area. Based on the consensus that I've gathered speaking to various lenders, we really think the market will pick up a lot of steam when we consistently see rates below 6% again. We saw that for about a month and a half previously. We want to go and see that those lower numbers and trending in the right direction, and we think the real estate market will recover a lot of the steam that it has lost. These are, of course, national averages. If you want to know what you qualify for, let us know. We're happy to introduce one of our lenders who can look at your credit and advise you on also what the best loan is for you. I won't go into the details here, but a lot of the federal loan packages, such as the FHA loans, they've lowered by about 30 basis points the cost of those loans. So they're actually much more affordable now than they have been in the past. So again, if you're curious about what you qualify for or what a monthly payment would be, let us know. We'll gladly introduce you to one of our lenders. But what effect has this had on the market? This chart here shows closed sales for Washington, D.C. Now, this is not the dollar value. This is the total number of homes sold for, not D.C., for the D.C. metro area. And you can see in May, it peaked at just about 7,000. Total homes, condos, all of that, all home types, and has been slowly been decreasing. Now, part of this is, of course, due to seasonal differences, with the spring and summer markets being the most active in terms of the total volume. So how does this compare to year over year? This is that same chart broken down year over year. And you can see every single month for the past 12 months, it was slower than that equivalent month the year prior. So in March of 2022, about 7% fewer homes sold than in March of 2021. And so it goes down to November and December, about 40% less total sales in those months. So for every 10 homes that sold in November of 2021, only 6 sold in November of 2022. Okay? So across the board, far fewer homes have sold. What has it done to prices, though? This is the median price in Washington, D.C. The metro area. It peaked above 600,000 and dropped down to about 500,000, which seems fairly drastic. But again, you have seasonal differences. If you look at the price per square foot, you'll see a similarly sloped line, higher in the earlier months and dropping down slightly in the later months. But how does this compare again to the previous year, that same month in the previous year? And that's this here. You can see while it's trending down, everything above this solid black line right here means that it's sold for more in this month than the previous year. So evenly as recently as December or in January, the median price per square foot was actually still higher than the previous year with lower interest rates. We did see 2 months, December and February, where it was about 1% to 2% less in terms of the price per square foot. Now, if we break this out also between condos in yellow and detached homes in red, where we often see that difference, again, the general slope of the line is the same. And if we look at a year-over-year difference, these lines look very similar. So take the yellow line here for condos, for the most part, across the DMV, the price of condos didn't really decrease in terms of that price per square foot. Again, we saw 2 months here, December and February again, where prices were slightly less than that preceding year. Okay. Days on market, again, we'll keep these same 3 lines here, yellow condos, red detached, and blue all. You can see that we had, on average, about 7 days on the market, climbing up to about 30, or just over a month, now dropping down to maybe 21. So from about 1 week on the market to 3 to 4 weeks on the market. Now, this is slightly misleading because the way this data is pulled, it's just on the houses that sell. So the median house in March, April, May, June, July was selling in about 10 days or less for the houses that sold. It doesn't count the houses that didn't sell, of course. But this is still obviously a very, very strong market. Even saying houses now take 3 to 4 weeks on average to sell, of course, that is still by all means a strong market. If we look at months of supply, we can see here, months were about a half month to a month, and they climbed now to about a month to a month and a half. The way we calculate months of supply is, say you have 10 houses that sell every single month, and there are 30 houses on the market, then of course you have 3 months of supply. Or if no other homes came on the market, all the homes would sell in about 3 months. By all means, this month to a month and a half still makes it a seller's market. Okay, you want to get about 6 months of supply before you have a true buyer's market, and we are nowhere even close to that. And one of the reasons is a lot of the houses simply did not sell. The sellers pulled them from the market. So this is some data that I compiled. This is just Washington, D.C. All the other slides we looked at were the D.C. metro area. This is now just Washington, D.C. So I want to zoom in here for a second and just say, let's compare January and February of 2022. All home types, 1,334 sold. January, February 2023, 895 sold, or a decrease of 33%. For the broken down to houses, 28% fewer, condos, 39% fewer sold. If you look at homes that didn't sell, either that expired, were withdrawn, or canceled, the listing, so were actually placed on the market and then just didn't sell, all homes were up about 81%. Houses were up about 113%, and condos up about 71%. So it's actually more dramatic for houses. 195 didn't sell in 2022 for those 2 months, up to 416 didn't sell for 2023. Why is that? It could be that the sellers wanted too much for their money, or now there's a little bit more supply with rates a little bit higher. Buyers are more selective, or there are simply fewer buyers, and the sellers weren't willing to do what they had to do to prepare their home. Or perhaps it wasn't well marketed, it wasn't well showcased. A year and a half ago, sellers honestly could get away with doing the bare minimum, and there was such scarcity, there was such competition amongst the buyers, the seller would probably be fine. Now sellers have to work a little bit harder for it. So what does this mean? Fewer homes are being listed, home sales have slowed, and inventory is up. For sellers, you can still get the price that you want. However, your home has to be properly prepared, priced, marketed, and showcased, and I think you'll be happy with that sale. Okay, just don't take it for granted. Of course, we'd love to meet you for a private consultation to advise you on what we recommend for your home in terms of that preparation, pricing, marketing, and showcasing. And for buyers, I will say this again and again, it is the best time in the last 10 years to be a buyer. Yes, rates are slightly higher. You'll refinance in the future. It doesn't matter. Buyers finally have leverage. They may or may not be able to get the house at a great price. However, they'll be able to get great terms. In the past, they had to do a pre-inspection, probably waive appraisal, waive financing, oftentimes throw money at the problem to win the contract. Now buyers have a lot more leverage. We are still seeing bidding wars on some homes. We listed a condo 2 weeks ago in Mount Pleasant. We had 2 offers within the first day. So there are still bidding wars to be had, but overall buyers finally have a good bit of leverage. And I've told everyone that I know, if you've been in the market in the past, do not give up. Talk to us. We'll introduce you to a lender. Talk to you about our strategy for finding you a home. Because you finally have leverage. If this interests you or someone you know, let us know. We'd love to have that consultation and to introduce you to one of our buyer agents. So that is your market report for March of 2023. As always, if you have any questions at all, whether about the market in general or your home search in particular, let us know. We'd love to meet you, introduce you to a lender or one of our agents, and see how we can best serve you. Thank you very much for watching, and have a wonderful day. Take care.